Good morning to you, Landon. Today we're talking a stock that we know is reporting earnings, and that's Kroger. This is one, of course, the grocery store chain that we've talked about with you and Andy and LikeFolio gang quite a bit over the last few years, and it looks to finally kind of be hitting its stride here.
Yeah, it does. Kroger's actually done really well, and in fact, during all of this crisis, they were largely unaffected. They've been kind of riding. The stock's been kind of riding around 32 for quite a while now, basically at 1-year highs. So doing well as a company, and it's one of those beneficiaries of sort of COVID, I guess you could say. We've seen a tremendous spike, of course, in people talking about shopping at Kroger. When you look at the purchase intent, it's incredible. I believe that this quarter that's being reported, February 2nd to May 23rd, is the fiscal quarter, and that period is about 3 times larger on a quarterly basis than what we would have expected. Just based on normal business. Now, what's interesting is that now we're kind of, you can see in this chart, you can see the spike in purchase intent data. That's that green bar there. Right when the quarantine started, everybody went out and stocked up. And you can actually see that the moving average is basically pulling back to where it was before. So we're seeing that purchase intent, that's people talking about going to Kroger and spending money, is basically where it was just before the crisis. Now, what's interesting is if you look at their digital sales, people talking about buying online, either for delivery or pickup, that is actually doing much better as far as retention of new customers. So massive spike here again. You can see exactly when the quarantine started, when people started stocking up. But that moving average, if you look at it just before quarantine started versus after, it's settling in at about double where it was before. So we talk a lot on this show about changes in behavior and impetus to sort of get people to do things in a different way. And I think that this is one that is looking like it's going to stick around. So overall, we're not seeing an increase in Kroger as a whole, but we are seeing a settling into an increase in people using their digital platform more, which I think is good for them. It's part of their strategy moving forward, and they appear to have executed fairly well on it.
So a couple of things, your data shows exactly what it tells me, exactly what you were just mentioning, that you see the obvious spike in the data. It's, quite, extreme in terms of the uptick, but it seems to be settling down there at higher levels. And so the overall stock seems to be doing better, but then there's this little thing called the Warren Buffett effect. And this stock, let's face it, if you watch this stock over the years, and we have, and I do, this stock has been left for dead a few times in its life. When Amazon bought Whole Foods, they creamed this stock to unprecedented levels. And then during the coronavirus, the original thing was down, last summer they killed it. But now, with Warren Buffett and the coronavirus, I think there's a new energy around Kroger. And what people don't realize is how massive this grocery store chain is. 3,900 stores owned and leased. It's just amazing how big they are. And that comes into that, almost throws them in with McDonald's and Starbucks in terms of scale. So, what do you guys? I guess what I'm saying is I don't have much to say actually. Is what is the future for Kroger is? They seem to be adapting, but they're massive, Landon.
Yeah, I think that they have been adapting really well. Just anecdotally, we shop at Kroger pretty much as our store. And I have seen over the last 5 or 10 years a dramatic shift from where it used to have maybe 500 square feet dedicated to sort of organic or healthy options to now it being like a third of the store. And they're competing with companies like Whole Foods on that because of the consumer demand. And additionally, when you look at what they've done in digital and online sales, they're executing very well. And so I think that they're far more adaptive than people originally gave them credit for. You mentioned the Whole Foods sell-off. I think that when Amazon bought Whole Foods. I think people just didn't understand that Kroger actually could execute fairly well. And I think now that the long-term bulls on Kroger are getting rewarded for that, because they really are doing a great job of hanging in there and adapting to what the customer needs, either through private label brands, which they do an excellent job of, or adapting to the more healthier options, or getting more digital. So I wouldn't discount them moving in the future long term. I love that they can execute, and they've shown that ability to execute. And this quarter is going to be really interesting with the massive amount of revenue coming in. I know analysts are expecting a lot, and I don't think that anyone's really expecting that the huge amount of purchases are going to carry over forward. Our data confirms that. It's basically going back to where it was. But again, the silver lining is that digital is up. It's settling in at about twice what it was before. So that's really good for this company, showing that they can innovate and execute.
Hey, Landon, two-part question here about the data, because I think it does confirm some of our questions that we had and answers that we thought might be the case from months ago when we were starting to ask these questions. But I think it also answers some of the questions that that we didn't know the answer to. The first part, anecdotally, I can say that I am much more of a order grocery now and delivery person than I was prior to this pandemic. And so what maybe made me start was not being able to go to the store without a mask or waiting in line outside has turned into me continuing to do it because, let's just face it, it's convenient and it's easy, and sometimes we're lazy, Landon. And it doesn't surprise me that some of that forced adoption maybe carries over just for that simple reason that it's convenient. But what I think is the question mainly here, Landon, is actually on the overall company. And so one of the questions that we had was, are these trends of more and more cooking at home, more and more grocery stocking, is that going to continue as the summer months start, as restaurants reopen, and there's more desire to get back out there and kind of get back to the normal routine of what people were doing on a day-to-day before the lockdowns? And this starts to make me think, maybe not, maybe that we're going to go back to what we were like before, but is it because of the overstocking? Or is it because now that restaurants are starting to reopen, there's less need to go to the grocery store?
I'm betting on a return mostly to normalcy. I'm sure a lot of people found new routines in cooking at home and doing things like that. But at the same time, we've got data showing people really missing getting out there, socializing, going to restaurants, going to bars, having a good time. And I'm really betting on a return to normalcy. I don't think that you're going to see just a huge shift of everyone's just getting groceries and eating from home now. I really think that as this winds down, hopefully very soon, but as COVID goes away sometime over the next year or two, it's going to be kind of a return to normal, and people will be going out. They'll be cooking at home just as much as they were before. And everything that we've got, again, says that people can't wait to get out and go to restaurants. And so where they're opening up, we're seeing big spikes for restaurants, and where they haven't opened up yet, we're seeing a lot of pent-up demand.
And so, Landon, building on that here as we wrap this up here, and I kind of get your overall take on the direction Kroger may be going. Well, do they get a markup from more people ordering ahead or getting delivery, or is that just benefiting the delivery companies? And second, if there is this shift back to normal and there is this overwhelming pent-up demand to go to restaurants, is there a chance that grocery stores actually see weak quarters in the future?
I would guess that, again, going back to normal, I don't think that they're going to see a weaker quarters in the future. I would say that it's just going to get back to the way it was. But as far as the other question, that's tough. I really don't know. Maybe you guys can help me out here, what the margins are for online ordering, or what the strategy is overall. Maybe it gets people into a more sticky situation where they're going to continue to be customers of that same grocer. And if all their friends are doing it, they're going to start doing it. Just like, you talked about the forced adoption, maybe word of mouth will help as well. I'm really not sure if digital is a key driver for revenue or profit, but I do know that it's a must in the future. Everyone's doing it. It is far more convenient. And once you do it a few times, you kind of get hooked on it. I know exactly what you're talking about, Alex. And so I think it's a must have. And it is evident from our data that they have executed that fairly well. We saw a small drop in happiness, just a few points, but actually we saw larger ones from companies like Whole Foods. So the brand of Whole Foods under Amazon. And so I think they're executing fairly well. And I think that's really key because in the future, this is a must-have. Delivery will be a must-have. I think that people are going to do a lot more shopping on their phones and on their computers in the future.